When will UK interest rates, the Bank of England base rate, come down to a sensible level? That's the question I'm asking today in Money Tips podcast, Charles Kelly Money Tips podcast. Well, the Bank of England kept rates on hold just recently at 5% after a drop, the first drop in 4 years in August from 5.25%, where it remained for several months. Now, Bank of England base rates dictates how other lenders will lend on things like mortgages, credit cards, other types of loans, and also the savings rates that people get. So people with mortgages are unhappy about high interest rates, but savers, people who've got money in the bank and maybe living off their savings, are happy with high interest rates, and they're not happy now that they're going down. Of course, savers had many years of pathetically low interest rates, and this is probably what fueled the boom in things like buy to let, because if you're earning say 1% on your savings, but you can put your money into a buy to let and get between 5 and 10% return, why would you not do that? Or if you wanted a more passive form of investment, you could invest in a bank share. Instead of having money sitting in say NatWest or Barclays earning 1% or 0.5% in some cases, you could buy their shares and get a dividend of somewhere between 3 and 5%. You can get dividends of more than 5% with some blue chip companies on the FTSE 100 index. So this fueled the boom in the stock market and property, which is both have reached sort of all-time highs. So the Bank of England rate, went up, of course, when we had high inflation, and inflation reached 11% at one point, didn't it? In end of 22-23, inflation reached 11%, and rates then went up to a 16-year high of 5.25%. So the Bank of England is saying, well, we've got to keep rates up because we want to get inflation down to our 2% target, right? Well, now it got to the 2% target. They kept base rates as it were. Now it's 2.2%. Why are they keeping base rates at 5% when it was at 5% when inflation was at 11%, right? But now inflation has come right down. If you look at this graph, it's come down like going down a mountain, and rates are still high. The US have dropped rates. I think rates have been dropped in Europe as well. So why are we holding out at 5%? I just think it's stifling business. It's stifling investment into things like property, because mortgage rates are still quite high. And I think they've got to do something about it. So what do you think? I know that something like a million people, or sorry, 100,000 people every month come off of a fixed rate, whether it's a buy to let or a residential mortgage, and then they're going on to new rates which often double their payments. I've gone through this myself, where they're quoting a doubling of a buy to let rate. And your existing lender won't really look after you. They say, well, we'll give you that, take it or leave it. So then you have to go and leave it. And believe me, getting a remortgage, which should be very simple because you've got plenty of equity in the property, you've got a track record. You'd think you were some sort of first-time buyer who's just moved into the country. The questions they're asking now are just ridiculous. And it's another reason why maybe buy-to-let is not so popular now, because you've got all the bureaucracy of the lender to deal with, high interest rates, and then you've got all the tenant issues and the renters' rights bill, which is going through. I've written about that. It's on my Charles Kelly Money Tips podcast. But as I said, we've had the Federal Reserve cut its own rate, fell by 0.5%, and they've got it between 4.75 and 5%. So they've done it. The European Central Bank, ECB, cut its main rate from an all-time high. Now they only went up to 4% to 3.75, and again in September to 3.5. So we are suffering here. Business costs and credit card rates, because they get jacked up as soon as rates come down. But as rates have gone go up, but as rates have come down, they're a little bit slow to change things. So you can still get mortgages on buy-to-lets of between 4 and 5%, but watch those hefty fees being crept in. Some of them go up to like £14,000 a fee on top of a mortgage, which makes a whole nonsense of saying, well, this is a 4% interest rate with, it's got a £13,000 fee on top. It's not really a 4%. And if you look in the small print, they'll show you what the real rate is. And of course, this is then added to the loan. And most people say, add it to the loan, which is then they're paying interest on that fee as well over the years. Now, it might not make much difference to their payments, but over years, it all adds up. So just watch that. Other thing I want to mention is that on the 1st of October, now maybe you might be seeing this when it's too late, energy prices will rise again by around about 10% in October. So now is the time to look at those fixed rates that are on offer. Just go to a comparison site like Money Saving Expert and fix your energy prices for a year or two so that you protect yourself against these rising rates. I'm not going to go into the whole details of the energy cap and all that sort of thing, but rates are going up, and apparently wholesale gas prices will be going up as well. Now, but we've got a painful budget coming up in October again. Everything's happening in October, I think. 30th of October, the painful budget. Oh, by the way, the next Bank of England meeting is not until the 7th of November. So rates, although the Bank of England said that they will start to reduce rates over the next few months, could they do a 0.25% cut in November? I hope so. For many people, it might be a bit late because they've already fixed a rate on their mortgage. And if you go onto the mortgage company's variable rate, that can be like 7 or 8%. So you don't want to be on that for too long, waiting for rates to come down, because otherwise you spent all that extra money, and what was the point? You might as well have fixed at what they're offering now. So I think we need some big changes here. Obviously, they're frightened of inflation, which they caused initially themselves, the central banks, through this massive money print, and they still haven't accepted that. So, as I said, we've got a painful budget coming up. As Mr. Doom and Gloom, Keir Starmer, said, a painful budget, we've all got to go through this thing. Now they're at their conference, they're trying to talk things up again. So, there's light at the end of the tunnel. Yeah, light at the end of the tunnel. Well, I think with them, that means the light is actually the headlamp of an oncoming train, which will hit you in this budget. Things like they could cut the single person's discount on council tax, which single people in the UK get a 25% discount on their council tax, which could be £500. It's quite, so that's if you live on your own in the property, you pay less council tax. That could go. We'll have to, let's see. It's certainly been discussed. Higher capital gains, tweaking inheritance tax rates. And it's forcing some landlords. One solicitor told me that one of his landlords is selling their portfolio of properties, and he wants to exchange contracts. So he wants to exchange contracts before the end of October, so that he avoids any new hiked capital gains tax rate. The thoughts are that they could increase the rate at which capital gains tax is charged. And of course, the last government already reduced the nil rate ban to £3,000, so they weren't doing us that many favours either. So you've got a government that there's not much difference between them in many way. So I think Labour are going to take us down a much darker road, I think. Other things they were talking about is I don't know if this is going to come in, but a wealth tax could be. We just don't know. They promised not to put up basic taxes, basic tax rates, national insurance, VAT, although they've added VAT, they say they're going to add VAT to school fees. And we've already seen the removal of the winter fuel allowance, which has caused a massive row, particularly when you hear that MPs themselves get up to, I think Angela Rayner got £4,000 fuel allowance on her second property. They also get a lot of these freebies and suits and glasses and trips and stays in New York flats and London flats. These are in the private sector. These would be called benefits in kind, and we'd have to pay tax on them. But they are, of course, exempt. They always look after themselves. So I think there's a general disillusionment with the whole of politics, really, with all of them. They all seem to be MPs seem to have their noses in the trough, just taking whatever they can get out of the system. But Keir Starmer took. He's the most, out of all the MPs, he's taken the most in freebies and gifts, including things like concert tickets to Taylor Swift, which were like gold dust, a box at Arsenal, and his gifts and freebies amounts to over £100,000. Yeah, £100,000 in freebies, considering when he already earns over £100,000, and the two of them, him and his wife, are worth something like £8 million. Why do they need to be taking free suits from Lord Alley and free glasses? It's just beyond me, really, how stupid he could be to take it, knowing that, and then he didn't even declare it. But he must have known it would come out, and of course it's a huge embarrassment to them, particularly when they were so self-righteous about the last government and sleaze and taking stuff from donors and this sort of thing. It's beyond belief. So watch out for that. Section 24 is the tax that was brought on by the last government, which has put many landlords into negative rental situations where, you know, the actual net rent they get after the tax, after the George Osborne tax hike, is less than their mortgage. One landlord wrote to me and said, "This is like killing us." You know, they've got a job, that they're higher rate taxpayers in their normal jobs. They had a couple of buy-to-lets which were making a small profit. Now they're not making a profit, and some landlords are even subsidising their buy-to-let. And when you add that to the fact that interest rates have gone up for them, doubling in some cases, you can see why they've got a problem. But there is a solution to it, and I've recommended many people to a chartered tax advisor that will help you move your properties into a limited company without suffering all the taxes that would normally go along with that. And it's done by a particular method, and I'm not going to even try to explain it. It's quite technical. So if you're worried about that, just drop me a line. And I think now, bearing in mind that we've got a socialist government that is after your assets, perhaps wealth taxes, and as I said, there's never been a better time to look at protecting your assets. If you've got assets, you need to protect them. Use things like trust, use things like properly written wills. So if you're worried about that as well, the same tax advisor can help you look at trusts and this sort of thing. Now, if you think, I haven't got any assets to protect, I'm a young person without a house or anything, well, one of the biggest assets you've got in your life is your earnings capacity, particularly if you're young. You've got 30, 40 years of earnings capacity ahead of you. So to do protect that, particularly if you've got a family, think about insuring your life if you've got a family or any debts against you, and put those policies in trust. I'm not here to sell you insurance or anything like that, but if you're self-employed, make sure you've got pension schemes, make sure you've got something there to give you an income when you've retired. Otherwise you can never afford to retire. Have you got any sickness benefit insurance, sickness insurance, for instance? All these sorts of things. So do seek financial advice, or if you want a financial advice, again, drop me a line on that, and I'll put you in touch with someone that I'm sure can help you. So thanks very much for listening. I'll keep this brief. What I'm asking today is, when will interest rates go down? Possibly in November, but let's see. Watch out for those energy price hikes in October. I hope you see this in time and fixed your energy prices, and painful budget coming ahead. We're looking at things can only get worse, as they've said, because of this imaginary black hole. And then now's the time to protect your assets. And if you've got any problems with Section 24, just drop me a line, charles@charleskelly.net. I also run a webinar, by the way. Sorry to bombard you with stuff. I also run a webinar on a Wednesday evening talking about the 3 steps to financial success and how you can really get control of your finances and become financially free. Thanks very much for listening. Bye for now.